Welcome to Digital Currents, brought to you by Morgan Creek Digital. I'm Xavier Segura. Each episode, we spotlight the topics and people changing the tech industry with a focus on AI, blockchain, chips, and big data. Thanks for listening, and please make sure to subscribe if you like what you hear. And remember, stay current. Welcome, everybody, to Digital Currents. Today, we have a really special treat. One of our favorite portfolio company CEOs, Andriy Lebedev, calling in from a very secure location, I might add. For those that are not on video, please watch the video and make sure that Andriy is safe. I think that he is. Andriy, say hello and welcome to Digital Currents.
Yeah, thanks for having me, Xavier. Always a pleasure. Yeah, in a bunker.
Well, we'll give a little bit of a brief intro to Andriy. I always like to have the guests kind of speak about their backgrounds because they're always so remarkable, but we can kind of give a little bit of a brief introduction here. So Andriy is the founder and CEO of Swipelux, and they are a Web3 payments and identity infrastructure company, and basically they allow users to very easily and quickly and cheaply send their money digitally over a crypto Rails infrastructure. So I will turn it over to Andrew for a more rich introduction on the background, and feel free to go all the way back. Sort of what kind of got you started into this space. I've heard the story, and I think it's a great one, and one that our listeners would certainly like as well.
Yeah, sure. So I've been in crypto space for about 9 years. So I remember when hitting 1K for a Bitcoin felt enormous, and now we are at 107.
Wow.
Maybe.
At time of recording, and we're doing this on a Tuesday on 17th.
Yeah, it's clear we are still not at the end of this growth story, and it's been incredible to watch the entire market evolve from these early days. So I started out working in hedge fund, then established a family fund focused on trading crypto. After that, I started Swipelux as a small side project. Basically, a friend of mine with a crypto wallet app asked if I could help users to buy crypto with a credit card. So his wallet would be actually be useful to newcomers. I thought it would be simple, just plug something in a couple of weeks. But you know how it is. As I got into it, I kept hitting all these unexpected hurdles like regulations, QIC, liquidity issues, and more. And before I knew, this quick favor turned into a full-blown business. So we realized the problem went beyond just fiat to crypto. The entire payment system is full of outdated, complicated processes. And that's how what started as a side project grew into Swipelux, where we are now working to fix those issues and make things simpler for everyone, especially in crypto payments and identity part.
Thanks so much for the background, Andrew. And I think it's a really good reminder that sometimes the favors that our friends ask can sometimes go a little bit off the rails. So I guess for all of the listeners, if you have a favor to ask Andriy, please send us an email, and maybe we'll start another company. Where we happened to find each other was actually at a demo day of Outlier Ventures, and our listeners might know that Morgan Creek and Outlier have continued our work together. We've launched an accelerator program of our own based out in LATAM, which the demo day is coming out in a couple of weeks, and we're super excited about that. And so Andrew was part of a class some time ago, and we were really impressed. If that's what that.
Quite a while ago, yeah.
Yeah, it feels like a super long time ago. And in terms of just kind of where we are now in the market, even longer than that. So, at this point, we will invest in early stage companies. And this was probably a little bit earlier than we tend to do. But I think the problem that you were working on, Andrew, was just so compelling. And you had already made a lot of traction, more so than many companies in the space that we've seen today. We'll kind of go through and pick up a couple of the topics that you opened with and letting the listeners know, especially now as we're recording right before the holidays, the topic on everybody's mind is spending, especially spending online, and doing so in a safe, secure, and a fair and equitable manner is of the topmost importance. So maybe we provide a little bit of that context and thinking about one of the kind of main ways when we say online payments and we think about Web3, one of the big areas that we're really speaking about are stable coins, right? And so they kind of account for 2/3 of total crypto transaction volumes. And so when people say things like, oh, cryptocurrencies are kind of pointless, you can't really do anything with them, nobody's really buying anything, they couldn't be more wrong. And stablecoins are a very big example of exactly this type of movement and transaction in the markets that's happening. We've now hit monthly volumes over 2 trillion this year. And they're no longer just this potential nice story that's kind of a quick bulletin on a website, but it's really a mechanism for how people are transacting online. Maybe if you can talk a little bit more about this, Andrew, because this is kind of at the center of kind of how Swipes is adding a lot of value into the ecosystem.
Yeah, you're absolutely right. So stablecoins have really grown up. Like initially, they were seen as a tool for traders like myself to hedge against volatility. But now we are seeing them used broadly for global payments and cross-border transactions. So they've got three main draws like speed, low fees, and stability against fiat currencies. For example, in regions like Latin America and Africa, stablecoin usage for retail and professional transfers grew over 40% year over year. And it's not just big businesses like freelancers, SMEs, and everyday consumers are using them to avoid all these currency risks and cut out these very expensive intermediaries.
Yeah. And I think that, this probably is a good time to bring up a little bit of a visual here, and we can probably play with how we're going to be presenting these. One of the nice things that Mark and I do in our chart of the week is we always have a visual. So I think, Andrew, you might be the first guest that will have a visual. So fingers crossed, I think that we will be okay. But let me know if you can see the screen, and then maybe I can set this up and you can further narrate this, Andrew, since this is really your area of expertise. And so when we're talking about some of these payments, let me know if you can see the screen here.
Yep.
Great. So for those that are on audio only, I think this is a really good episode for us to check out the YouTube links, so that way we can follow along with all the great visuals. So I will just have a brief narration here, Andrew, and then I'll turn it over to you. But what we've got on a slide here for those that are on audio only is an overview of traditional payment networks. And so they're kind of like two main dominant networks here. And Andrew, feel free to confirm, deny, or question anything that's put up on these slides. We had our team put this together, but we definitely wanted to refer over to your expertise, is to say that, the main ways we've got Swift, which kind of has a fee up to 3% on the FX and kind of a flat fee of $15 to $50. And it can take a couple days to settle. So, it has some challenges because of those two things. And of course, folks are very familiar with credit cards. I know I am now in the holidays, probably way too familiar with some of the credit card pains, but I'm doing this as a consumer, right? So in theory, the consumer doesn't really feel some of this pain. except we do because things cost more, right? So you can have a markup, again, even higher than Swift, as well as, some time that it takes to kind of send things. And now maybe with the stablecoin idea, maybe we kind of turn it over to you, Andrew, and kind of speak through some of this as the legacy problems with payments and kind of how stablecoins can present potential solutions here.
Yeah, sure. So it's really a big topic, and there is a whole ecosystem of vertically integrated companies building one on top of another. So think of the entire ecosystem of the payments like a stack. And we have that for the Swift, we have that for the Visa and MasterCard, and we have the same for stablecoins. So for the stablecoins, for example, at the base layer, you've got the stablecoins themselves, like USDC, USDT, and now even XRP, newly introduced stablecoin, or it's still a rumors. On top of that, you have companies like Swipeplugs, where I work, that focus on making the transition from the credit card to crypto, including stablecoins, effortless. And or another company like Bridge that handles the conversion from the traditional wire transfers into the stablecoins. So together we are creating an environment and potentially like the mix of Visa, MasterCard, and stablecoins payment stack, where it's seamless to move in and out of stablecoins no matter your starting point. And then leveraging these foundational infrastructure, developers are building user-facing apps that completely hide the complexity of crypto from the end user. So take invoicing tools as an example. Like our customers like Sarbat or Archway Finance have created solutions that allow freelancers in Africa or other countries to invoice a company in the European Union directly in euros. But under the hood, the payer is actually purchasing stablecoins and sending them to the freelancer's wallet. But from the payer perspective, just like doing what appears to be a normal euro payment. And some of these solutions even like integrates right into CRM systems, making the invoice and payment process feel as simple as sending a PDF. And what's really interesting here is that it's just the first wave. The next wave of companies working on this conversion back out of crypto on the other side. So think of local crypto to fiat companies. So you end up with a full loop, fiat to crypto to crypto, and crypto to fiat.
Yeah, and that's a good transition for a slide that we'll set up here with this first one. Again, those that are on audio only, check out the YouTube link so we can kind of continue to expand on some of these amazing topics. But the idea here that you've touched on is, part of the reason for the increase in cost, Andrea, has got to be that more people have to take part and their fee in what is this relatively long chain of intermediaries, right? So on the Swift side, there's at least 3. Visa, MasterCard, there's at least 4. With stablecoins, it's direct. So you can really kind of reduce some of that time down, as well as the fees in terms of what you're able to receive. In the Swift side, consumer, local bank, correspondent bank, receiving bank, merchant, right? And credit card, consumer issuing bank, card network, acquirer bank, merchant. And that's just at a simple kind of level. If you're involved in some more kind of exotic type of transaction that involves other digital networks, it could get even larger. There's data providers involved in this. So we're not even speaking about the potential security risk that could happen with some of these types of transactions. I think all of us that are listening to this podcast have either been hacked or we know somebody who has been hacked. So kind of transitioning to the other point that you mentioned about kind of this transformation and these payment providers and networks, I wanted to pull kind of an illustration of some of the things that Swipe is doing. And then Andrew, maybe you can kind of narrate this for us a little bit. In kind of your last explanation, you were talking about when you have this kind of direct connection from payment individuals, you can kind of open up an entire new network in this value chain. So can you talk through this a little bit more and kind of some of the things that Swipe is driving as part of this transformation?
Yeah, sure. So like on top of all the issues you mentioned in the previous slide, there is a lot of different bigger pain points. Like for example, concept of rolling reserves and holding periods. So if you're a new non-traditional merchant, maybe you don't have a long processing history or you sell products that don't fit neatly into the card network guidelines, payment providers may impose some terms. So you could be facing something like 180 days rolling reserves plus 10% hold on every transaction up to 5 days. So that means that your customers basically today, and you might see only 90% of your money after like 5 days. And the remaining 10% is locked up to half a year.
Wow. Wow. So that definitely can create a huge challenge for companies that are SMEs that are relying upon relatively cheap payment providers like Stripe and think, oh, I'm okay. I'm supporting small business. Well, no, actually, there still is this kind of underbelly of a payment processor from the credit card merchants themselves that kind of are, really holding up a big part of that payment. And if you think about small businesses, their margins are relatively small. So 10% withheld in cash could really become a huge problem. So I will turn off the sharing. Thanks, Andrew, for kind of walking us through that, and maybe talking a little bit more about what you're seeing in the space now, as far as an area that maybe folks are underutilizing in this kind of payment network. One of the things that I thought was really interesting that you just touched on was Bridge. So for the listeners, Bridge was the largest M&A by dollar amount in the Web3 space. Is almost $1 billion. What this will do is the Bridge acquisition will provide Stripe the ability to enter into Web3 using stablecoins, but they're kind of this Web2 incumbent player. They're not a Web3 native. So Andrew, to that point, maybe speak a little bit about this trend that you're seeing. Maybe what's missing. Do you think it's going to be Web2 companies that are going to kind of have these bolt-on acquisitions that'll be successful, or do you think net new Web3 companies are going to service this need with stablecoins?
It's a great question. First of all, obviously we are seeing a lot of effort from established players like Visa or Stripe. The reality is that the payments field is super messy. You have payment networks, you have payment processors, you have payment gateways, and all of them are working in combination and trying to solve one big issue. So it's approval rates. It's quite common that some business is trying to open, trying to receive money internationally from his customers, and he is facing the 20% approval rates. So it means that 80% of the customers are not able to make a transaction. And this geo-focusing is different for different payment processors. So for example, US payment processor could have 80% approval rate in Europe and 20% in US itself. And because of that, the company stands to work with the payment gateways who are basically merging together more payment companies. So, and also like providing a technical solution. So because of that, those like end users could have like 80% approval rate across like majority of countries. But, there is a big trend that on top of a traditional like Visa and MasterCard players, there are also alternative payment methods like open banking, Skrill, and all these like new things, but are also uh, basically pushing the end users to pay differently. And because of that, we are seeing some aggregators who are trying to aggregate everything underneath them. So Stripe just quite recently introduced the open banking and trying to work in that direction. A lot of players like Blade are trying to integrate the open banking solutions. And even in our customers, we are seeing this big trend. But what's really interesting here, but the problem still stands. The problem with holding periods and rolling reserves. So let's imagine that you are a payment gateway. You have a lot of different players who are working with you, and you are trying to settle between them. So to provide a better solution than ours, you are pushed to basically shift the responsibility on the merchant. And so we are still on the same story of holding periods and rolling reserves. So crypto, like just pure crypto transactions, could easily fix that. But the reality is that the end customers are not willing to pay in stable coins. Like it's really complicated to understand how to pay like all these like gas fees. You need to have some wallet and all of that. So I believe you would see more and more traditional companies who are leveraging the crypto settlements inside of a system just to pay between different entities they are working with. So even in our relationship with more traditional payment companies, it looks like that more and more traditional payment gateways are relying on our solution to basically have these like faster settlement and no holding reserves.
Yeah, and I think you touched on a lot of good points there, Andrew, and one in particular kind of pulling apart this idea of the alternatives, because I think, in your conversation, it's pretty clear that some of the incumbent players are not going away anytime soon, right? So that's why they're looking to kind of augment what they're working on today. Whether it's being part of the Onyx network that like Visa was recently declared to be a part of. They're kind of thinking about ways to participate in Web3, and I think stablecoins are kind of the low-hanging fruit. We've seen this become close to a legal type of tender in places like the Middle East, where they haven't kind of made this official legal tender, but they're increasing the favorability for transactions between financial institutions using stablecoins. So maybe we can talk a little bit about kind of the regulatory aspect of the other category. One of the things that when we were doing our diligence and we thought so highly of your team was because you kind of thought about compliance in a very cautious way and in a very deliberate way, kind of using the build approach instead of just the speed approach, and making sure that you were finding kind of the right compliance framework. So Indy, can you talk a little bit about how that factors into the equation and maybe some things that might benefit those that are looking to participate in this value exchange?
Yeah, sure. So, first of all, regulations in crypto is a mess. So right now we hold licenses from several central banks, and all the steps we have done to ensure that the regulators are even understanding what we are doing, it's insane. Uh, for example, I believe I didn't tell you that story. Our angel investor was pushed for a meeting with the central bank, and it was 8 hours meeting. And angel investor flew from like US to like Estonia, especially for a meeting with a like central bank on the license discussion. And and central bank was like asking all these questions about like how the three lines of defense is working, who is like AML officer, risk officer, how the two eyes principle is working in swipe blocks. It's crazy from the position of the regulators, but right now we are seeing, especially in Europe, like more mature um, position on the virtual currencies. So first of all, we have the MiCA regulation itself. It's a huge step towards a better understanding and also opportunity for the more traditional companies to work with the crypto segment. So because of that, we are seeing as Visa and all like traditional banks are like working in that direction. And like at least right now, they could cooperate with crypto companies without breaking the law, you know? And obviously, like Nika is allowing to obtain a license, but is clearly saying we are like thinking about anti-money laundering. We are doing all the steps necessary to ensure that the crypto wouldn't be used as a like money laundering or terrorist financing. And also it opens an opportunity to basically streamline the user experience. For example, the license companies could share the information between themselves. So to ensure that the end user could just share his information and not to undergo KYC thousands of times.
So to that point, Andrew, and you bring up a pretty interesting uh, idea here that maybe we can think about an application of smart contracts. So this idea of making sure that the intended action has the intended result. And I think when you look at banking today, given some of the challenges with all the intermediaries, there could be a problem with code. There could be a problem with maybe some bad behavior that goes on in between parties. Maybe they put on sort of a bad partner that kind of interferes, or everybody's worst nightmare, somebody just kind of hacks into the system, and then there's a huge problem. Maybe can you talk about how smart contracts can kind of address some of these legacy problems kind of on the back end to kind of ensure cleaner settlement or potentially protect the user more than where they are today?
Yeah, sure. So, like how we are seeing the current situation and how unpleasant it is for the merchant. I believe Mark saying during the previous podcast about like a flea market and that you push to like pay 5% on top in case you are paying with like a credit card. It's all like it's mainly about risk management. Like the traditional payment processors hold into a portion of your funds for a long time to protect themselves and indirectly to protect the end customer against fraud, chargebacks, or like any disputes. So essentially, we're using the money as a collateral to ensure that the merchant would deliver what he promised. But for the merchant, from the merchant perspective, it's brutal. Like tied, tying up funds for like 180 days can crush cash flow, as you mentioned. And few stable coins, the settlement can happen almost instantly. So that's a huge win for the merchant, but it does introduce a challenge. Like, how do we handle risk and protect customers if we don't have all these like long holding periods as a form of leverage against the merchant? So the whole point of all of that is to reduce fraud. So this is where the Web3 and smart contracts could step in. Like, imagine a scenario where the funds are held in a smart contract that releases payment to the merchant only when a certain conditions are met, like shipment confirmation or a customer making the product, like marking the product as delivered. So instead of 180 days reserve, you could tailor the condition to specific products like shipping timelines or like reputation scores and all of that.
That's great. So in the future, we might be able to replace these long holding periods with code enforced conditions, right? That can kind of protect everybody's interests. And that reminds me, Andrea, of like the first time I got hacked, sending money online. I was young and I was attracted to a very good discount on a car product I wanted to get. So I thought, okay, it was cheap relative to what the list price was, but not like super cheap where it wasn't believable. It was kind of just in that scammer sweet spot. And I think I might even have spoken to this guy on the phone at the time. So my mistake was being an impulsive teenager, but then also using Western Union because at the time, there was no real protection or recourse. There was no slashing, right? In terms of if there was a bad actor. I think PayPal has kind of helped and stepped up a little bit in this regard where they have some consumer protection, like under $1,000 in some cases where you can reclaim that. But at the time, I didn't have that. So I think when you're talking about this idea of replacing long holding periods with sort of this code, a smart contract is basically code that can enforce conditions that ensures everybody's interests are protected. Is that how kind of you see the future going into the payment side along with sort of some of these other changes that we're talking about?
Yeah, obviously, like quite some time ago, like the end user protection was like biggest focus of the whole industry. Like obviously, we don't want to create a future where the customers needs to make a huge due diligence just to ensure that he would get what he is promised. But it looks like that it's pushing on the merchant so hard that um, the economic growth is not as fast as it could be. So that's the reason why the next steps are necessary. And obviously it won't like happen overnight. Like right now, even with crypto settlement, many of our customers like payment gateways are still replicating the traditional reserves model because that's what they know and regulators are comfortable with it. So it's quite funny. We are sending them the money instantly, and after that, they're withdrawing from the wallet like once per 7 days, just because all the processes inside the firm are working like that. So as the market evolves and more trust is established in these Web3 mechanisms, I expect we'll see uh, more merchants benefiting from the instant settlements and all of that. Like just yesterday, I was speaking with CFO of one large payment gateway, and it's client of ours. So I was helping her how to bridge USDT on Polygon to USDT on Ethereum. And right now, as we are seeing more and more companies trying to consolidate these like crypto part inside their internal operations. I believe the end customers and the merchants would finally see the result of the whole crypto trend.
And kind of
And
on the other side of the spectrum, and maybe we'll kind of get this question in before we go to the really fun part of our conversation, the lightning round. I'll have to do the heavy lifting for Mark today, who's out. But to kind of go to the other side of the spectrum, it's not necessarily that popular yet in the US, but the idea that you kind of mentioned about open banking, and some people are saying that this can kind of like bypass the issues altogether. I kind of see this as this could maybe work for certain transactions and certain merchants kind of accepting this kind of a standard, kind of to Mark's point in the earlier podcast, kind of like a flea market type of interaction or type of setup. Could you kind of expand a little bit about this kind of trend and maybe what you're seeing in Europe?
yeah, like Europe took a regulated for good approach, like break down the Visa and MasterCard monopoly, like encourage innovation and like lower fees for the merchants. The intention was excellent, but the realization wasn't so great. Like right now, we have seen that the open banking is basically struggling to get a big share of the usage and also introducing some of the challenges. So like, for example, the merchants couldn't just like integrate in Sweden, for example, in Nordic countries. They can't just integrate Visa or MasterCard. They need to integrate all of the payment solutions, including Visa, MasterCard, including the alternative payment methods. Uh, like, obviously, the aggregators are trying to solve that. So we expect like the same trend would continue in the US, as US was also a little bit pushed to like approve open banking, and we would also like I believe see some monopolies, some aggregators in the US, and after that we would return back to your story where you just like not spend with Amex card, but you just done a bank, like open bank transaction. And so it means that in reality, you have sent the direct wire to wire, and the merchant, or in this example, like the customer just forgot about giving you the card. So
Oh, I love it.
yeah,
I love it. Maybe we can transition at this moment to as I mentioned before, the fun part of our podcast where we get to know our guests just a little bit more. These are going to be rapid fire questions, just kind of to have a little bit more of the B side, right? So the A side in the olden days, I have actually a CD here on my desk. So even older than these, I don't know if you knew this, Andrew, but now LPs are outselling CDs for the first time. So you have digital, and the second most sold type of audio media is an LP, a long disc, as opposed to the CD here. But we don't have record players in our cars. So that's where the B side came, because you literally have to flip it over to the second side. You have the big songs on one side and then the kind of the rare songs. So the lightning round is the B side of the interview. And so maybe opening it up with kind of what inspired you to kind of start a payment company, and why did you choose Estonia as the base?
yeah. So Estonia is quite simple. Like it just like the first country that introduced some laws about the crypto. So as nature of our like company is to collaborate, like be the intermediary between all these like Web3 shiny businesses and banks and payment networks, we needed to get creditability. So we need to be licensed, and that's that was the only choice, to be honest.
So I think that's probably a thing a lot of our users don't know is that, and certainly I had to learn was that, Estonia is very much a digital first type of place. Maybe can you talk about some of the kind of early challenges that you faced in launching the company?
Oh man, it was a lot of fun. Like to be honest, the worst part was like working like for half a year without like obviously without any money, without any like support and all of that, just to like get like to make the first transaction. So basically to see that as a first user is using your product. And like I was mentioning the central bank. And the funny thing was that based on the law, uh, like it needed to be like around 3 months of approval period. So he fired all the breaches, like ticked on founders mode and started to work on the company. And in 3 months, like we were expecting to get a license to finally start like working. So we have like all the product is ready, like all the like merchants are ready and waiting for us. And after that, in 3 months, we didn't got any like response from a central bank. So I was constantly like calling there and asking like, come on guys, it's based on the law. You needed to like approve or decline our application. And after like 2 months, they said, you know what? Yeah, like we need to do an interview with all the people, like all the C-suite, all the investors and shareholders. Uh, I'm saying, yeah, sure, we would love to. You know, my favorite trip to Estonia. So what's the time frame for that? They're saying, yeah, not sure. Now, maybe like in a couple of months. And after that, like what was the 3 months of approval or decline, like maximum time frame, it turned out to be like a year and couple of months of a horrible experience of constantly like pushing the merchants um, to like start later on, and later on. So I believe that was one of the hardest part
All right.
to start.
And maybe you can tell us a little bit about your time as a young CEO and you need to go to recharge the batteries. Where do you go to get away in Estonia?
Yeah. By the way, I'm not in Estonia.
That's right. Listeners, Andrew is in a remote location in the bunker. So his actually an undisclosed location. No, I'm only half joking. In our calls, we chat often. Andrew's in a new city almost every month. Most often in the Czech Republic, but then I've also seen in Dubai. Where are you now? Let's start with that. Where are you now, and are you safe?
Yeah. So right now I'm in Slovakia. We have one of the companies here, like one of the subsidiary, and like there are a couple of the clients who are sitting here, and like the pretty of being working completely remotely, but some big deals you could just like fly there and make the deal by doing handshakes.
Excellent. So where do you go to recharge the batteries then, now that you're in Slovakia? It could be, I guess, outside the bunker.
Yeah, so to be honest, I'm a huge fan of snowboarding. So I started five at 5 years old, and then I have an opportunity. I'm doing snowboarding, and then I can't. I'm just doing meditations.
Oh, that's wonderful. I just went skiing and took my son this past 2 weekends ago. He did great. And I would love to be able to go a little bit more often. So, where's your favorite place to eat in, let's make this a little bit more specific. Where's your favorite place to eat in Eastern Europe?
Huh. Uh, yeah, in Eastern Europe, like I believe Czech Republic, like there is one burger place, not as good as it is in New York, but still like second best burgers in the world.
Great. And what is the one app on your phone, other than swipe blocks, that you can't live without?
Yeah, I believe like uh, Superhuman.
Oh, nice, nice. So I've been using Superhuman, the AI email messenger. I think maybe you put me onto it, or somebody else. I started using it, and then, like many people, I've stopped using it, and now I'm kind of in this decision crossroads that I'll have to make. We'll see what happens for next year. So if the metaverse were a real and larger place that we all can all jump into, what is the first thing you do in the metaverse?
It's a great question. So if we are considering the metaverse would be like really as it should be, so the first thing I would do is do like a golf on a Mars.
I love that. I love that. And also reminds me, I've just been spending a lot of time now as we approach the holidays with the family. We went to the planetarium and took the little one and my wife to the Mars mission. So kind of a little bit of the immersive experience. And it kind of reminds me of another thing, Andrew. What is, in terms of like sci-fi, and I know you're huge in tech, what is the one kind of sci-fi technology you wish existed today?
Like obviously, I would love to see the opportunity of talking with people without making the noise with the lips. Like think of like uh, all the things Musk is working on. So like telepathy and all of that. But I believe maybe we would see that in a couple of years.
Oh, I love that. Okay. And that's also unique, a unique response as well. Telepathy. Okay, great. And I
What
guess
about you?
for me, the one technology would probably be teleportation, right? So I think that's one where, especially now being on planes a lot, so much time I find is just in transportation, and that's usually the most disruptive. When in the end, what we really need is that human connection. So, Zoom is kind of halfway there where we're able to speak to each other on other sides of the world. But, not holograms, full on teleportation, and maybe on the idea of sci-fi, we can figure out what is happening in my current state of New Jersey, which I'm sure you've been seeing all of the UFO reports going on. So we're seeing maybe some sci-fi come to life. So okay, last question is, what do you have planned for Christmas? Are you taking a big trip? Are you staying home? And please tell me you're doing more than just working, because I know you're going to say work.
I'm just working. But yeah, returning back to the teleportation, it sounds to me like a truly scary experience, to be honest. Like, are you sure if you would be teleported, you would be like yourself on the other end?
That's the big question. It's not so much the going and teleporting. It's having everything be reassembled in the right place in exactly the right location. So when you look at, Star Trek, the originals, having everything kind of, go from point A to point B, it was probably the most underappreciated thing, although it's so amazing. We could probably have a show just about all of the sci-fi elements from Star Trek that are actually real now. Things like cell phones, microwaves, spaceships now. I mean, there's a lot there. So I would not be the first one. Let me make that clear. I will not be the guinea pig. or even the beta tester. I am pretty early on my adoption S-curve as a VC, but I will not be an early innovator when it comes to teleportation. Maybe when I'll be a laggard when it kind of, has already been tested, many times.
Wow. I hope you would send me an invite. As we see, you would obviously experience that before me.
Absolutely. So I guess we will conclude it there and say thank you so much, Andrew, for joining us and educating our listeners to the great innovations that are happening, not just at Swipe, but broadly in the payments ecosystem. We're going to see probably another record be set this year is my prediction for what would be already a very, very sharp rise in economic recovery globally. And I think now people are starting to feel a little bit more positive about the economy, not just in the US, but also globally. And that tends to mean more spending. And that also tends to mean more online transactions. So we're going to kind of look forward to some of those records being broken, and we'll have to invite you back on and you can talk to us about how stablecoins were part of that huge record-setting trend, I hope. So huge thanks, Andrew, to joining us today. And as always, we'll remind our listeners to rate, review, and subscribe. Check out Swipe on X, on LinkedIn, and all over the internet. And definitely, if you are a merchant in need of payment solutions, please reach out to Andrew at Swipe, at Swipeblux. We'll remind our listeners, as always, to stay current. Thank you for joining us this week on Digital Currents. Check out our links to our website and social media in the show's description box. Please make sure to subscribe if you like what you hear. And remember, stay current.
This podcast should not be construed as investment advice nor solicitation for the sale of any security, advisory, or other service. Investment themes and ideas discussed may be owned by funds managed by the host and podcast guests. Any conflicts at the time of production have been mentioned by the host but are subject to change. Listeners should consult their personal financial advisors before making any investment decisions.